Thanks for clicking. The Canadian Real Estate Association, the CREA, has released its data for the month of June, showing a real estate market that is slowing down after a major rebound over the first half of this year. The release comes amid the Bank of Canada's announcement on Wednesday that it would be raising interest rates, bringing the prime rate to 7.2%, the highest we've seen in 22 years.
You can't keep getting away with it!
Indeed, industry reaction to the widely expected call was swift, bordering on hysteria, as the rate hikes are no doubt going to put downward pressure on home prices. The CREA, for its part, conducted an interview with tried projectionist and CREA economist Sean Cathcart, who tellingly has reduced his optimism.
That's a big gain, but I don't expect it to continue like that.
As we'll see today, when one of the real estate market's biggest optimists, one of the real estate market's biggest cheerleaders, downgrades their outlook, that's definitely not a good sign for the market. So what I want to do today is go over Canada's real estate data for the month of June, take a look at the interview with Sean Cathcart, and then discuss what to look for next. Speaking of next, Canada's inflation data is set to be released next week, and with Canada's inflation rate hitting a 40-year high 1 year ago, many are expecting that we're going to see a big reduction in price growth. We'll obviously have an update out on that data on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this data. First up, the benchmark price. The benchmark price, if you'll remember, that's the price of a home, which represents the most popular set of features. The benchmark price was up in June, with May's benchmark sitting at $736,000 and was up to $749,100 in June. So that's a $13,000 increase in the benchmark price in June. With that said, the average price of a home was down and down significantly. The average price in May was sitting at $729,000, and that dropped down almost $20,000 to $709,218 in June. And the slowdown in prices makes sense when we look at the number of listings. New listings in June were up 5.9% from May, which is a fairly decent sized increase in the number of new listings coming to market, especially if you consider that at this point in time last year, we only saw a 4.1% increase in listings, and the year prior, we only saw a 0.7% increase in the number of listings coming to market. And with more properties coming to the market, and not to mention the Bank of Canada increasing interest rates up to 5%, it's likely that we're going to see more downward pressure put on prices going forward, as even mentioned by the CREA.
We now have more properties coming available for sale finally, but also we have the Bank of Canada resuming rate hikes, which will likely send some demand back to the sidelines in the second half of 2023.
This is the hardest thing I've ever had to do.
And, says CREA economist Sean Cathcart, it is possible that we could see more interest rate hikes going forward.
One thing the bank did not do in this announcement, which they did do back in January, was give any indication at all that this was the top.
Actually, that's 100% not what the Bank of Canada said in January, though that is 100% what the CREA said.
The Bank of Canada is increasingly signaling that rates are now at the top, so buyers are likely feeling increasingly confident in taking on variable mortgage rates again.
But it's a little risky having a high school student give financial advice.
What the Bank of Canada did say back then is that it was pausing on interest rates, and it would be more than willing to raise rates again if it was warranted by the data. However, not to let the facts get in the way of a good FOMO, back then, the CREA pushed on.
But I do think history suggests that the market could surprise us again this year. It certainly does have a very strong track record for resilience at this point.
But, says July 2023 Sean Cathcart, a lot has changed over the past few months.
After the April rate announcement, there were many observers that thought we would be seeing rate cuts as soon as now. So a lot has changed.
And that is true. Some observers back in April of 2023 did say that we could be seeing interest rate cuts by the summer.
And the Bank of Canada held rates again in April, as they did in March, as they said they would do in January. Plus, they reiterated that they think inflation will now be back to their target range, under 3, by this summer. So it's happening really fast. And that means rate cuts could be coming sooner than people think.
Other institutions, on the other hand, like the central bank, the institution that decides the interest rates, said that rate cuts didn't look like the most likely scenario and didn't rule out further rate hikes. In fact, the CREA was one of the only observers predicting interest rate cuts by summer. As evidenced in the Financial Market Participants Survey released in April, the Bank of Canada conducted interviews with 30 market participants, and of the 27 that responded, 100% of respondents said we wouldn't be seeing rate cuts in the summer. So on the one hand, we had Sean Cathcart and the CREA predicting rate cuts in the summer, predicting rate cuts and pushing FOMO, and on the other hand, we had the Bank of Canada and 30 financial market participants saying otherwise.
The April rate announcement, there were many observers that thought we would be seeing rate cuts as soon as now. So a lot has changed, but that just means a lot can still change.
Yeah, which makes the playing the prediction game such a concrete science, right?
You can't say that some people said something when those people were you, and then now predict that because those people were wrong, that anything can happen in the future.
This game's not for you.
So, in summary, Cathcart says that in January, the Bank of Canada said rates had hit their top. It didn't, and they hadn't. In April, predicted that we would see rate cuts in the summer. We won't, but is now predicting a slowdown in the market.
So more supply and less demand should calm down price growth, and it should be a more balanced, slower market over the second half of this year.
And I bring up the CREA's distortion of the past, not just to make fun of the CREA, and definitely not just to poke fun at its credibility.
Always been partly about that.
But rather to show that an organization that has shown an almost blind ability to be overly optimistic, ignoring history, logic, and basic principles of methodological analysis. Remember when they said that 2019 and 2023 had comparable real estate markets?
And I think I've seen this movie before, back in 2019.
Despite all of the reasons why they didn't, if an organization that is that blindly optimistic is predicting a slowdown in the real estate market, then that's not a good sign for that real estate market. When even the Canadian Real Estate Association, which we poked fun at so many times on this channel due to its overly optimistic predictions,
thank you,
and even they say that we're looking at a slowdown for the remainder of 2023, that's definitely not a good sign for real estate prices for the real estate market going forward. So, in June, we did see a slowdown in Canada's real estate market. We saw much more listings come to market, and we saw a slowdown in the average price. We did see a marginal increase in the benchmark price, but with rates up again and more listings coming to the market, it's not clear that that benchmark price won't be reversing anytime soon. With that said, we will continue to track how these rate hikes affect Canada's real estate market on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for